Chapter 4: The US Dollar, Global Faith and Financial Power. Part 1: From the Bank of England to the US Dollar, the Journey of Trust. The Bank of England introduced a new kind of money, one based not on gold, but on government debt and public confidence. Britain built the model, but it was the United States that scaled it. America didn't stop at creating national money. It transformed the dollar into a global currency, one tied to trade, oil, debt, and military influence. The dollar became more than a currency. It became a belief system. Part 2: The Bretton Woods Agreement. The dollar goes global. After World War II, Europe and Japan were shattered. The United States, by contrast, held nearly 2/3 of the world's gold, more than 22,000 tons, and a booming industrial base. In 1944, 730 delegates from 44 countries met in Bretton Woods, New Hampshire. Their goal? To rebuild the global economy. The US made a proposal: let the dollar be the world's reserve currency, backed by gold at $35 an ounce. All other currencies would peg themselves to the dollar. The world agreed. They needed stability and access to American capital. With that, the dollar became the center of global finance. It was trusted because it was backed by gold and by US power. Part 3: Nixon's break, the dollar untethered. But trust has its limits. As the US ramped up spending on war and welfare, it printed more dollars, more than its gold reserves could support. Countries like France began asking for gold in return. Then, on August 15, 1971, President Richard Nixon appeared on television. He announced that the US would no longer convert dollars to gold. Overnight, the dollar became a fiat currency, based not on metal, but on belief. It was a bold move, but the US adapted quickly. It shifted the dollar's foundation from gold to something else entirely. Part 4: Free trade, embedding the dollar in global commerce. The US pushed hard for free trade, using institutions like the IMF, World Bank, and the GATT, which later became the WTO. Countries were encouraged to open their markets and to trade using dollars. Today, more than 60% of global reserves are held in dollars. Over 40% of international transactions are settled in dollars, even when neither party is American. The more the world trades in dollars, the more it needs them. And that demand keeps the system alive. Part 5: Free navigation, the dollar's naval backbone. Trade depends on shipping, and shipping depends on security. The US Navy is the world's largest. It protects vital sea lanes: the Strait of Hormuz, the Suez Canal, the Strait of Malacca. These routes carry oil, food, and raw materials, the lifeblood of global commerce. By securing the seas, the US also secures the dollar. Trade flows smoothly, and confidence in the dollar remains intact. Part 6: The petrodollar, replacing gold with oil. In the early 1970s, the US struck a quiet deal with Saudi Arabia. In exchange for military protection, Saudi oil would be priced in dollars. Other OPEC nations followed, and just like that, the petrodollar was born. Oil, essential for every economy, now had to be bought with US dollars. The dollar was no longer backed by gold, it was backed by oil, and behind that oil stood American military strength. Part 7: The dollar vortex, China and Vietnam. Even countries that challenge the US can't escape the dollar. Take China and Vietnam. Most of their international trade runs through dollars. Even when they buy from each other, dollars are often involved. To buy raw materials and fuel, they borrow in dollars. Then they sell goods abroad to earn dollars. Then they reinvest those dollars, often back into US Treasury bonds. It's a cycle, and the US just keeps printing the currency they all need. Part 8: Superpower without production. The US runs massive trade deficits. It imports far more than it exports. But unlike other nations, it doesn't need to earn foreign currency to pay for this. Why? Because the world needs the dollar. There's more than $300 trillion in global debt, and much of it is in US dollars. Other countries work, produce, and export. The US prints, borrows, and consumes. And still, the dollar remains dominant. Part 9. Why nations can't escape trade pressure. Even when countries want to move away from the dollar, it's hard to do. China, for instance, gets over 70% of its oil through sea routes protected by the US Navy. Vietnam sends over 30% of its exports to the US. Any disruption, tariffs, sanctions, or blockades could cripple their economies. The US doesn't just control trade, it controls access to trade. Part 10. Military enforcement, oil and oceans. If China were cut off from oil passing through the Strait of Hormuz, it could face collapse in a matter of weeks. That's why the US Navy's presence in global waters matters. It guarantees that oil keeps moving and that it keeps being priced in dollars. It's not just economic strategy, it's military-backed monetary power. Part 11. Attempts to escape Iran, Russia, and China. Over the years, some countries have tried to move away from the dollar. Iran set up oil for goods programs and experimented with crypto-based trade. Russia developed its own payment system, SPFS, and built up large gold reserves. China promoted the yuan in bilateral trade deals and launched its digital currency, the eCNY. But these efforts have seen limited success. Today, less than 2% of global transactions are settled in yuan. Russia still relies heavily on dollar-based systems for most of its trade, and whenever alternatives gain traction, sanctions or military pressure often follow, slowing them down or cutting them off entirely. Part 12. The dollar's philosophy, power and fragility. The US dollar draws its strength from trust, but that trust is also its biggest weakness. Unlike previous currencies, the dollar isn't backed by gold or by physical production. It's backed by belief. Belief in American stability, influence, and strength. If that belief falters, whether due to war, a major financial crisis, or a new disruptive technology, the entire system could start to crack. Fast. Part 13. Global debt in dollars, the infinite loop. Today, global debt has surpassed $300 trillion. A significant portion of that debt is denominated in US dollars. Countries borrow in dollars to fund development, trade, and infrastructure. But when dollar demand rises, or when the Fed raises interest rates, repaying those debts becomes harder. So they borrow more. It's a loop, one that strengthens the dollar with every turn, and yet, at the same time, it slowly weakens the borrowers, locking them into deeper dependence. Part 14. The dollar's future, stability or collapse. Will the dollar last forever? There are signs of challenge. China and Russia continue to build alternatives. Bitcoin tempts investors with the idea of trustless value. And political division inside the US is testing confidence. But no clear alternative has emerged. As long as oil is priced in dollars, global trade runs through American networks, and the US military maintains dominance, the dollar remains on top. Still, we've seen this before. Once, it was gold. Then it was the British pound. Now, it's the dollar. And no reign is eternal. Part 15. Conclusion. The dollar, trust, and power. The US dollar is the final evolution of modern debt-based money. It's no longer a physical object. It's no longer just national. It's global trust, made liquid. It moves through oil pipelines, shipping lanes, and digital networks. It touches every transaction, every market, every country. But even with all its reach, the dollar is still a belief system. And belief, like water, can shift without warning. The dollar flows as long as people trust it. But the moment that trust fades, everything changes.